morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, February 10th. All right, guys. Well, we have an explosive move out of this boring range that we've been in since July. Today is the first day. Well, yesterday was the first day, and it doesn't make a whole new trend or an uptrend. I do believe that we are on our fifth and final leg of this tiring bull market that's been going on since 2009. And this is exactly what I was talking about. I want to see euphoria. I want to see mortgage the house, buy everything, keep buying in the stock market. There's no way to go. Keep buying the market higher as we're at all-time highs. Consumer confidence is at 6-year highs. We're at all-time lows just about in the VIX. And I'm going to show you some divergence in the VIX and the XIV just for fun. I think it's a fun-looking chart. And what does that mean, though? We always talk about this. And I get some emails, Mark, you can't call a top. Nobody's calling a top. Absolutely not. You never want to call a top. It's detrimental to your trading account. What do? You follow the trend. Because the indexes were at least quite boring since July, and you pick your spots. You have to go outside the box sometimes, and that's why I wanted to show you today. Our TMT algorithm, the Viper, actually picked off a beautiful, beautiful trade. Again, this is fully automated. It's in our trading room. You got to come check it out, guys. Nice little trade today. And why did we run it on Under Armour? Well, real simple. If I scroll back, you'll see this is the big drop last week on earnings. But if you looked at a daily chart, it's been in a downtrend for quite some time, right? You could see that here from $27 back in early January. But this is just a 5-minute chart, so I can't go back that. But if you go look at a daily chart, you'll see. So what is this quarter? I'd say it's basically throwing a baby with the bathwater out, right? Throwing the kitchen sink. And shorts pounding this thing, pounding it. And what happens? Can't get through. Well, look what happens when you see these little ranges here, and we get full-blown extension of our candles, and we get that one little pullback. It was a great entry. 1867 was the entry, and this is automated. This is not me drawing on the charts, guys. This is absolutely how it happens. And of course, the 200 period capped it for the day. But great trade. $19 number. Very easy to manage. This is why I say, and I brought this, bringing this up for a point, is that if the indexes aren't doing it, okay, and they're quiet, why not look for something else, some alternatives? And that's something that I wanted just to show you guys here, okay? Now let's take a look at this. This is a fun-looking chart. Here is the VXX, which are long volatility, right? Here's the XIV, which are short volatility, basically long the market, right? This follows what the market does. This goes against it, right? Well, you could see now the how the market right now is at its inflection point right here with the VIX and the XIV. So we went from literally about $15, you can't see it, from about 70 to 100 here. And now we're at 70 and we're at $18. The VIX is in a 10 handle again. Why do I bring this up, and I continually bring this up, is I want to warn you guys. I'm not saying that I want you guys to do anything other than stick to your plan, but have a plan for an exit strategy is what I'm saying. If you feel like the market's going to go to the moon, 30,000 in the Dow, 2,900, 3,000 S&P, that's fine. Just get yourself some protection. As you can see, this is the VXX ETF track, and it tracks the VIX, but you can see it's relatively cheap. You had bottom basement pricing. So protect your portfolio, and there's a lot of long-term traders, investors here, and swing traders that I get a lot of emails from. I'm just saying, just be careful out there. That's all I'm saying. Do we follow the trend? Absolutely. What do we do tomorrow? Today. Well, if today the market opens up and we get a strong market like we did yesterday, we buy the market. It's plain and simple. We just continue what we're doing, knowing in the back of our minds this could stop and end very quickly and begin a pullback and an ugly correction, which I believe is in the cards and actually happening, okay? If you do a little homework, and it's actually, again, another fun little thing, do it over the weekend. Go look back at 1987 crash. Go look back at the 2000 crash. Go look back at the 2009 crash. Very, very similar. And actually, the 1929 crash, if you really want to do a little homework, very similar in price, very similar in election years that we've had. It's just, it's actually scary. of what, if that does happen, what's to come. Okay, and again, I am not saying that it could happen. I'm just saying that it will. It could happen. So just be on your guard. Okay, dollar. Let's go right to the UUP. We held our uptrend line. We held our horizontal line, which was a big area of support. We filled that gap here. That's also good, a big gap fill. Now let's see if we continue to move higher here. Obviously, that's going to affect what? Gold and crude oil and on the commodity squadron itself. So just be careful if you guys are trading it and you're long gold. Getting to that point, I do think that gold is here to now test what it has moved. This, I still believe, is corrective move. This is not a move that now we're starting a whole new leg higher. I think we're going to get that one more pullback. And if we can stay above the TMT proprietary price channels and hold and even make some sort of, you could, if you look at this, you could even see, let me grab that. If you can come around here, and you could see that could be a little bit of a cup, and then maybe the handle come into here, and then the big explosive move, which would, that handle would look like a bull flag right into the inverted head and shoulders neckline. That would be just dynamite. Okay, that's when you want to look to buy. I'm not looking to buy this now, and I'm not looking to sell it at the moment. I do think gold is in a second stage bull market, and I think we're on our next leg up higher, at least to challenge the highs. Okay, GLD, same thing, guys. You can see here, and this is based off of our premium video, and I always like to show you guys what you're looking at, what you're getting. This is really interesting. Take a look at this chart now, and I'm going to pause the video, and then I want to show you what we give you here at TMT. Now, the TMT subs, they saw this already, and this is something that, which I'm going to make a big announcement in the next couple of weeks on the videos. You'll see this is what the subs were going into today. We're contemplating saying that, okay, if this holds, we're going to look to get short. And sure enough, some of the subs had a good day off of simple support and resistance, pointing out where support and resistance, and obviously you have to manage it and you have to get in your own trade or whatever, but if you give a support and resistance area and you feel as a trader it's holding support, like this for instance, then you look to buy it and you pick your own spot, obviously, but it's there. These are calculated support and resistance areas. It's not just moving averages. It's a lot of work that goes involved in these areas, and it's plotted for you. Spiders in a big bearish rising wedge. And the Dow, the S&P, the NASDAQ, all made, and Russell, not the Russell, excuse me, but all three of them made all new all-time highs today, and everybody got their hats out. It's just divine. I just love it. It's amazing. It means absolutely nothing. It means absolutely nothing. What does mean is, are we breaking out of this base, and are we going to test and challenge the highs here? And if that's the case, that's what you want to prepare for. Okay, 60-minute. Just want to show you. We have a nice big, bearish rising wedge, and to make it a true wedge, you need 5 waves in the wedge, and I pointed them out here, 1, 2, 3, 4, 5, and I put question marks here to say, is it going to stop here, or does it continue to go higher? Because if it does, then you got to adjust the wedge, and then it might not be 5 waves. So that's why I put the question mark here for you guys. But right now, it seems to be a really well-defined bearish rising wedge, and it's only bearish. Why? And when you break the lower trend line. Okay, so right now it's the pattern, but it has not triggered. IWM daily, you could see here coming out of this bull flag. Now, if this does break out, guys, I mean, you're talking of massive expansion here in volatility. I mean, you take this flagpole and then you apply it to this, and you're talking some big price movement in a Russell 2000. I do believe that the Russell is going to be the ETF to buy this year. I don't think it's going to be it right now off of a crazy move like this. Now, yes, it has consolidated, so there is a bullish case to that, right? We've just been drifting since pretty much all of January and February right now. But to me, I think I like to see prices come back down to at least close to the 61.8% retracement, even if 50. Remember, there's that thin zone. Once we lose that thin zone, the markets will basically, the price will suck down all the way to the next price level. Okay, and I'm not too happy with our MACD and RSI, guys. So again, I'm going to be a little bit more patient on that. Transports, what can you say, in a range since November, and that's what it does. If you look back, it's a terrible index to even invest in. You got to do it in individual companies, because look at this. We went back from April all the way to almost the end of November. the Donald Trump rally, and we're back here again. So we are consolidating at the highs, which is bullish. Just keep an eye on the transports for some clues. Last is going to be the Qs, and we did break out and made new all-time highs. And this is an uptrend channel. This is not a bearish rising wedge. So let's keep in check and see where we go from here, and see if this thing has more legs today, and of course on Monday. Have a great weekend all, and we'll see you then. Be safe this weekend.